So, let's talk about the current situation and, just establish the baseline reality here. PI is currently trading around 20 cents, which honestly represents a 30% collapse over the past month, but that monthly decline actually pales in comparison to the devastation from its all-time high. PI peaked at $3 in February 2025. So, from $3 down to 20 cents means that holders who bought near the top are now sitting on losses exceeding 93%. That's not a correction. That's annihilation. PI ranks among the worst performing cryptocurrencies over recent months, and even the devoted pioneer community, traditionally known for unwavering optimism, is, well, starting to show some cracks. The question being asked over and over is, can PI reach $1 before the year ends? That's the question I put to 4 AI models, and honestly, their responses range from cautiously pessimistic to outright dismissive. But here's what makes this analysis valuable. AI systems don't have emotional attachments. They don't hold bags. They don't need PI to succeed for psychological validation. They analyze data patterns, historical precedents, technical indicators, and probability distributions. Their assessments, while not infallible, really cut through the emotional noise that clouds human judgment. So let's take a look at what each AI predicted and, more importantly, the reasoning behind those predictions. ChatGPT was the first AI I consulted, and its response was, well, diplomatic but firm. The model described reaching $1 before the end of 2025 as, quote, not entirely impossible, but a big stretch. Breaking that down, ChatGPT acknowledges a non-zero probability while at the same time indicating extremely low confidence. It's kind of the AI equivalent of saying, technically, you could win the lottery, but planning your retirement around it would be foolish. ChatGPT identified specific catalysts required for a $1 rally mainnet milestones and major exchange listings. The model specifically mentioned Binance as a potential game changer. Earlier this year, Binance polled its users about listing PI, and the majority voted yes. Yet Binance has remained silent, which, honestly, speaks volumes about their internal risk assessment. Exchange listings create liquidity and visibility, but, they're not magic bullets. Plenty of tokens get listed on major exchanges and still bleed value if the fundamentals don't support the valuation. ChatGPT gets this, which is why it conditions any bullish scenario on multiple catalysts aligning at the same time. A statistically rare occurrence. The model's implicit message is pretty clear. Don't bet on $1 happening this quarter. If you're holding PI with that expectation, you're really just setting yourself up for disappointment. Grok's brutal realism. Grok, the AI integrated into X, formerly known as Twitter, delivered perhaps the most brutal assessment. It predicted that reaching $1 during the fourth quarter would be, well, extremely difficult and outlined a more realistic range. Sideways trading with modest gains to 30 to 40 cents if catalysts align, or dips to 15 to 18 cents on continued selling pressure. Let me emphasize that downside scenario, 15 to 18 cents, represents another 25% collapse from current levels. For holders already down 93% from all-time highs, watching PI drop another quarter would be psychologically devastating. Grok conditioned any upside on major partnerships between Pi Network and established industry players, combined with broader market euphoria. Both conditions are outside PI's control and far from guaranteed. But Grok did identify PI's competitive advantage: community size. The pioneer base is massive compared to most cryptocurrency projects. However, and this is critical, Grok emphasized that community alone can't sustain value without proven utility. You can have millions of users, but if they're not generating economic activity that validates the token's existence, the community becomes a liability rather than an asset. Everyone holding, nobody buying, creates relentless selling pressure. Grok's analysis essentially argues that PI's strength has become its weakness. A massive holder base without corresponding demand equals distribution pressure that suppresses price. Quick timeout. If this AI analysis is giving you clarity you haven't seen elsewhere, smash that like button right now. This kind of objective, data-driven content takes serious research, and your engagement ensures more people get access to honest assessments instead of moonboy fantasies. And, if you haven't subscribed to TJ Crypto World yet, hit that subscribe button and ring the notification bell. We're cutting through crypto narratives with evidence-based analysis. Alright, let's continue with what the remaining AIs predicted. So, let's talk about Gemini's cautious outlook. Google's Gemini AI actually sees similarly limited upside for PI. It estimates there's only a small probability of PI reaching about 50 cents during the fourth quarter, and describes that $1 target as, well, a very optimistic case. In other words, don't count on it. According to Gemini, the main obstacle to price expansion is the scheduled token unlocks. The data shows that over 120 million PI tokens are set to be released in just the next 30 days. That's a pretty substantial amount of new supply entering the market. And, basic economics tells us that if you increase supply without a matching increase in demand, the price is going to go down. Token unlocks create predictable selling pressure because, honestly, early participants and team members usually end up selling off some of their holdings, and you really can't blame them. They've been mining or working on the project for years and want to finally see some gains. But from a price perspective, it's just this relentless downward pressure. Gemini's analysis points out that until these token unlock schedules finish up or at least slow down a lot, PI is going to have a tough time holding its value, let alone appreciating in any significant way. This supply overhang basically acts like a ceiling, capping any upside potential and, at the same time, speeding up downside risk. So, what does all this mean for PI holders? Well, it really comes down to understanding your timeline. If you're hoping for short-term gains, Gemini's assessment suggests you're probably going to be disappointed. Now, if you're thinking long-term, that's a totally different calculation, which, by the way, we'll get into in just a bit. So, Perplexity took the most pessimistic stance out of the 4 AIs when it comes to the short-term outlook. It doesn't see PI getting anywhere close to $1 this quarter, honestly. The reasoning? Perplexity points to overall sentiment and technical indicators, both of which, it says, are strongly negative right now. Instead, it forecasts a more likely range somewhere between 18 and 26 cents. Basically, sideways movement or even a slight dip from current levels. But, Perplexity did bring something up that the other AIs didn't really focus on, the long-term potential. The model actually estimated that PI's valuation could rise over the next few years, so patient holders might eventually see some returns, just not as soon as most people are hoping for. This difference between short-term pain and possible long-term gain is actually pretty important for anyone thinking about investment strategy. If you're holding PI and expecting it to skyrocket any day now, Perplexity's analysis suggests you might want to rethink your position. But if you see PI as a multi-year bet on eventual mainstream adoption, then, well, the calculus definitely changes. The real challenge here is psychological. Can holders actually stick it out through what could be years of sideways or even downward price action, all while waiting for the fundamentals to catch up with those lofty valuation expectations? Honestly, most people can't. And that's why projects with long development timelines usually end up losing holders who eventually just give up and sell. So, here's my analysis. Which AI prediction do I find most credible? Honestly, Grok's assessment resonates most with me because it acknowledges both the realistic downside risk and the conditional upside scenario, while also pointing out PI's actual competitive advantage and, its weakness. The 15 to 40 cent range for the remainder of the fourth quarter just feels right to me, based on the current market structure, token unlock schedules, and the lack of near-term catalysts. Now, could PI surprise and rally harder? Absolutely. Cryptocurrency markets are, well, irrational, and unexpected catalysts do emerge. But betting on that kind of surprise would really be speculation, not investment. What concerns me the most is the proven utility gap. Until PI demonstrates sustainable economic activity beyond just community enthusiasm, like real businesses using it for real transactions at scale, the token just doesn't have fundamental support for higher valuations. Community size is definitely impressive, but communities without economic purpose eventually disappear. For PI holders, manage expectations. Understand your thesis. If you're hoping for $1 by year-end, the AI consensus suggests that's extremely unlikely. If you're holding for long-term potential, define what long-term means and what milestones would validate that thesis. Before we wrap, 3 quick asks. First, hit that like button if this AI-driven analysis provided value beyond typical crypto content. Second, subscribe to TJ Crypto World and enable notifications so you catch my ongoing PI coverage as these predictions play out. And third, drop a comment. Are you holding PI, and what's your realistic price expectation for Q4? Let's build a conversation around evidence-based assessment instead of hopium or FUD. Alright, crypto truth seekers, that's the comprehensive AI prediction breakdown for Pi Network's Q4 price trajectory. Massive appreciation to everyone who watched until the end. You're the audience that values objective analysis over emotional narratives. Remember, AI predictions aren't guarantees. They're probability assessments based on available data. Market conditions change, unexpected catalysts emerge, and black swan events defy prediction models. But understanding what sophisticated analytical systems forecast helps inform better decision-making than relying solely on community sentiment or personal bias. Before you leave, I just published another video where I analyze 3 cryptocurrencies that AI models predict will significantly outperform PI during Q4. It's linked in the description and on the end screen. Definitely worth checking out if you're considering portfolio rebalancing. Until next time, stay rational, stay informed, and make decisions based on evidence rather than emotion. This is TJ from TJ Crypto World, and I'll catch you in the next one.